Hello, hello. Just there you go. Yeah, my microphone is not working. Hey. So good morning, everyone. Uh, I am gonna start by going over my trades this week. It was only one trade on one asset. I see someone's watching. Just welcome to the stream. I've created an indicator using Pine Editor that I want to go over, but I think let me first start off. First things first with this right here. So these were my trades the past. No, this is April. We'll go to today. Alright, this is the only trade this week. It was a loss on the NASDAQ. Yeah, there was not really much to talk about. 2025 model was non existent, and there was just one trade on NASDAQ. Now, one thing I do kind of realize, let me open up a new chart, is we're in a really bad time to be trading. We have been for a while, and I haven't really been trading much because it just kind of makes sense why, to me at least, we're not really seeing a lot of movement on the chart. We're in this kind of slowdown, potentially falling markets. Like all the markets are really falling. They're down from the highs. Mainly Bitcoin, especially Bitcoin. Gold and Nasdaq. Also, one thing about Bitcoin is different this time around. The correction, I'm seeing a lot more people saying that this is a dip and to buy the dip. I don't know if that's a dip. It might not. I don't know. It could go down a lot further than where it's at. If I'm being honest, so I mean, we could be in a deeper retracement period, where volatility spikes, and whenever volatility spikes, like I said in the previous weeks, doing these live streams and videos, that's not good for my model. And the same thing, whether it spikes higher or spikes lower, it's usually worse when it spikes like lower, like volatility just completely evaporates in the market. So I do expect that to happen too, whenever this retracement stops, and then once we start to, like, the market start to be boosted again and start to go back up, that's I think when profitability will return, or until whatever volatility is happening right now eventually regulates and it becomes like normal. So the market kind of adjusts to what's going, or people kind of adjust to the narrative. But I just think right now it's just too much volatility at all of a sudden. And as to why this is happening, there is, like, the Federal Reserve, I think, is maybe gonna tighten next month or gonna stop lowering rates. I'm not too sure actually, but I know there was a lot of concern there. And then there's also some hedge funds that are going bust, are in the subprime market. So Trump's coming out with the 50-year mortgage. Like, there's just a lot of things going on right now that should cause volatility going forward. Very soon. I think we're just waiting for something to break. But let me go over some ChatGPT queries. So one thing I kind of was asking myself is, if I were to go all the way up on this query, I don't know if it's here. I was trying to build some indicators to kind of capture these ideas, but see, this is what I said to Chad. I have a model that fails when volatility spikes and when volatility crashes. It explain why. Years ahead of a crisis like 2005, 2006, very slow, bad years by model. And I was wondering if we might be in this sort of era, because I've seen a lot this week, a lot of people I regularly watch say that, like, what we're seeing right now with how the subprime market is in trouble and some hedge funds are going bust, and that we're coming out with these stupid ideas like 50-year mortgages, and Trump is trying to prop up the housing market so housing prices don't fall. A lot of it mirrors 2008. So it's like we're headed into that crisis again, right? So I'm asking myself, are we ahead of this? If there's going to be another crisis, are we ahead of this? And why have I been seeing profitability? That was my main question. If we are ahead of a big crisis, shouldn't it be slow and worse for my model? But obviously, 2024 was a very good year in 2025 too. But I also remember we had a lot of mini crises compared to 2005 2006. We didn't have any of that. You know, that it was obviously it starts going on. I think eventually, yeah, like micro crisis every 3 6 months. The Ukraine rates, Middle East inflation prints, AI bubble. So as long as these mini crises keep happening, like some war goes on or the Fed is maybe gonna switch or inflation surprises us, AI hype continues. There's maybe more like news there that creates volatility. As long as things like this keep happening, then yeah, we should see volatility. And then to confirm this, I said, okay, no, this is not it. I asked, where is it? Not here. Maybe it was on Grok. Oh yeah, July and March both had losing streaks. Anyway, I could have anticipated this using trading view indicators. And then it said, the fact you pinpointed July and March drawdown zones says you're already looking at trading the right way through volatility regimes, not just entry. So I think it actually gave good reason, like volatility crush post earnings, low volatility before Q2 macro data, summer liquidity drain, volume dries up, ATR and VIX fill. So these are months that are more likely not to work off the bat, right? Then it's I don't think that there was any like crises during this era like that was too crazy or was right ahead at least or after a big crisis. So I think this is I think it was on Grok that I had asked this question, but it gave me kind of it won't be here, but it gave me a list of crises that happened in 2024 and 2025, and I was able to kind of it also gave me like an indicator that indicated when volatility was crushed and when it was spiked, and each time there was a losing streak, it was inside one of the zones. And there wasn't really much going on, or there was something huge that went on that created a volatility spike initially that caused a losing streak. But at the end, I didn't really find a way to anticipate it. You can use a bunch of different indicators, but I just found that it becomes tiring to look at all these different indicators, and then you have to like also fine tune it. To the point where, for example, I was using Bollinger Band spread, and Bollinger Band spread, when they compress, it usually means, I think when it compresses, it's it means the volatility is drained. Or wait, hold on. Let me just search it up. Actually, I don't want to say the wrong thing. A Bollinger Band spread. It indicates the volatility of the stock's price. No, what happens? The bands widen when volatility increases. Yeah, okay. So when it compresses, that means volatility is like being drained. There's a liquidity, realized volatility crush. However, it was the case that either the bands were way too tight or way too high, and then my indicator that I used ChatGPT to build said, okay, this is a red zone, and there were losing streaks in each of the red zones, but there were also some red zones that were good months, and it's because the indicator was confusing the high volatility. Like there was a time where it was high volatility and the bands widened, and it confused the high volatility inside a choppy market that had no direction. It anticipated as compressed, and it anticipated the high volatility in a choppy market as low volatility because it didn't have a direction. So because it didn't have a direction, the bands were just flat, even though there was high volatility in lots of trades that were profitable. So there was like some false signals basically. And then I need to add more indicators and make it direction, like add an indicator to gauge direction. And I just feel like it would suck to try and add all these indicators and try and make something work that's perfect. It's not going to be perfect. And if I take losing streaks, it's okay. Like I think most of that will be trying to anticipate losing streaks will be intuition. Like if I see, okay, right now it's really quiet, nothing's going on, no one's panicking, People are worried about it, a market crash, but everyone's still bullish. Like the market seems to be crashing, and there is reason to worry about it, but for some reason everyone's bullish, saying, "Oh no, we can still buy, AI hype, buy gold, gold's going up again, Bitcoin, oh buy the dip." It's just, oh, Trump is, for example, I saw somebody say, "Oh, Trump is going to give out $2,000 to everybody affected by the shutdown." That's stupid because, well, um, when it's stupid that people would think that that drives the price of Bitcoin up, because it did during COVID, but that's before Bitcoin was institutionally adopted as an asset, a financial asset. So if banks are selling Bitcoin, it's going to be institutionally driven, not retail driven. If Trump goes out and gives $2,000 of stimulus to everybody that was affected by the shutdown, and people have disposable income, yes, they'll likely, like, I work as a Bitcoin salesman and I sell Bitcoin machines. Yes, it's gonna drive up the revenue, but more people are gonna buy Bitcoin with their disposable income. However, it's not going to affect the price very much because it's institutionally driven, not like it was during COVID when people had money and they pushed the price up. So the fact that Bitcoin's going down right now is actually a concern, and it shouldn't be making any cases for being bullish if they're basing on the fact that people are going to get a lot of disposable income to put into Bitcoin. I'm just an example of a lot of different false scenarios that people are putting out there and saying, yeah, no, we're still bullish. When I'm not saying we're bearish, but I'm just saying there's risks right now with these hedge funds going bust. It's something scary to look out of, and as Jamie Dimon said, where there's one cockroach, there's often more cockroaches, and it's just he was right. Like, it was, more hedge funds are starting to go bust from when the first one a few weeks back did in the subprime market. Anyways, let me move on to the indicator I was using, which was the ATR. Let me widen it a bit. It sucks how I don't know why it's like that. It's making it super, super small, but it's making it super, super small. But so basically, remember last week I was using average true range indicator to figure out. Let me go back to this other chart to figure out, what should be the, like, I think it was in the last in the current hour, the average range, so the range of the current hour, and then I would look back on the last 5 hours and take the average range of each candle on the hourly chart, and then it would tell me, basically if the 60 to 70% is like it's like an industry number, like it's known to be a good filter for when volatility is out of line. So if, let's just say, you have average range in the current hour is doing a candle of 30 points. In the last 5 hours, the average range was 100 points. There's obviously a huge difference with the movement. There's to a point where the volatility is mismatched. So I was last week backtesting that, and I showed some of my findings. For example, ATR was present. The ATR rule would have stopped me from taking these 3 losses on the Nasdaq, this loss on the Friday here, and then it does make the model more profitable. And I think there was only 1 or 2 wins that I would have missed out on. But however, I was thinking about it, and I'm like, okay, well, the last 5 hours, that's like since 4 a.m., and then only the current hour, it just didn't seem, to me, it didn't really seem like maybe we could be using more. I hadn't fine-tuned it yet, I hadn't really tweaked it yet, and this was just me using what ChatGPT said. So I put my ICT hat on, and I said, okay, well, what makes sense? Like, obviously 2 a.m. is when most of the volatility comes in, because that's when London opens, and then 9:30 also looks like the London close. Now, I decided to try out, I'm going to try and backtest this morning, the ATR indicator here that I have. So what this is, basically, it's got the red line, which is the last 8 hours, the live, and because hourly, TradingView uses the hourly candle close to show the ATR, so if I add an indicator and I make it the ATR, it'll be different, than what I this is in the last 8 hours. It'll be different than when I make it here. Yeah, so you see how it'll be kind of, actually this is some 3 a.m. not 2 a.m. It'll be different than here. It's at like 16.79 versus the 8-hour ATR here is a different one. Sorry, this is a 5-minute chart. Yeah, so you have to go on hourly chart. So 7.9 or 80, about 80, versus the other one on the 5-minute chart is at about 78. So it's basically, what this does is it allows me to look at the 1-hour ATR on a 5-minute chart, and also it takes real time. It doesn't use the candle close, so it didn't show much of a difference when I went on. The only difference was like 9 points. But if I were to use a period of time like after 9:30, I'll show the ATR at the current time is going to be way different than where it will be at the end of its candle close. And TradingView replay mode, the indicators up here, the ATR indicator would use the candles close to display the ATR, regardless of where I'm at inside of that hour. Because if I go up to the hourly chart, you can see it closes down here at 19,464 and 3/4. But then on the 5-minute chart, I'm not at this price level. I'm at 547 and 3/4. So there's a difference between where the 1-hour chart is and the 5-minute chart, and that's because TradingView always uses the candles close, whatever reference point you're using. That's why I had to get FX replay. I just didn't think of coding it this way, so I asked ChatGPT to make me an indicator that would just use the current hourly ATR, and it would allow me to see it on the 5-minute chart instead of an hourly chart. Because when I go in replay mode, I can't have 2 screens at once with my plan. So yeah, the blue line is just basically the range of the current 9 o'clock hour. So it's the ATR of the last hour, but live. So it's not going to give me the ATR. If I were to go on the hourly chart and look at the ATR, it would be like 79, like I did. So 1-hour chart will add the ATR, and you see the value is at 80, because that candle moved by about 80 points. I don't know, 169 points. Oh, that's a 14 ATR. No. Oops. What did I do? Oh no. Whatever, I'm gonna have to. Oh shit. Whatever, I'm gonna have to change that. It's okay, I have the code anyway. Yeah, so no, this one. Sorry. There you go. We're gonna keep that one there. And let me actually just save this. Okay. So this is let me change it to 1. Okay, see at 1 it's at 169, right? Just the range of the candle, because it's one candle, it's one period. So we're just taking one candle. Then if you go on the 5-minute chart, the blue line is going to be taking 1 period, 1 hour, but it's taking the live price. So it's actually at, instead of showing what the 1 hour is showing, it's actually at 33, which is like how much the 9 o'clock hour has moved by so far. 36.75. It's about there, 36.75. Now this allows me to not have to use different time frames and FX replay. I can just use TradingView and keep practicing without paying for FX replay. The dashed line is so basically if the blue line gets above the red line, it's going to calculate 65% of the red line, 65% more. So the red line plus 65% of the red line. And if the blue line's below, it's going to calculate 65% of the red line. And this is basically the two extremes at which, if at 9:25 the blue line is beneath, I don't trade. If the blue line's above, I do trade. Or sorry, if it's in between, the dashed line and the red line, I trade. If it's not, then it's outside, whether below or above the dashed line, I don't trade. So over here it's going to say no trade on the left indicator title. It'll say no trade, and it only works for 9:25. So here would be a day, Monday the 28th, where I started just on April, because April had a a long losing streak. I think that was the first losing streak. Maybe actually we could start in March, because I think March also had a lot of ATRs. Okay, well, we'll start in March, but just like where I was April 28th, 24th they respected the ATR. 28th also now is ATR rule, and I'll just do the next day, just so that we'll see if it works or not. Just go forward a day, go back to the 5-minute chart, and right at 9:25. Okay, so right at 9:25, you see the blue line's beneath the dashed line. Actually, this might not be, like, this might be a failed experiment, by the way. I'm not showing this as like a proof of concept. This might not work at all, and it might be less profitable. And I mean, I could go back always to using the 5 hours and the current hour. But here it's beneath, so that means I also win trade. I'd miss out on a win. I stopped the recording, and I'll re-record when I'm done. But actually, probably will fail. No, wait a minute. Why did I? Oh, this is the 28th. I thought we were. No. I need the 29th. Okay. Yeah, this is the trade. Okay, perfect. See the blue lines in between. So, what I want to see with this test is basically the model stays profitable and it's not any less profitable. I would just like, obviously, I would just want to get rid of losing streaks. I'm not looking for an insanely good win rate. It's just losing streaks affect the edge. I would like to be able to have filters for when the market isn't looking good. And I think maybe using a bigger time span is going to help me do that. And it's going to get rid of more trades, which would reduce losing streaks. I just would not want it to get rid of so many trades to the point where the model was like my 2025 model. Well, I mean, it wouldn't really be a bad thing. It's just there would be like maybe like less trades, like one a week. Compounding would be harder. But there's always ways around that. So it's not really a big issue if it makes the model better. Let me also just go right back to 9:25 just to make sure. Yeah, so it was in between, which is good. This is a time where I would trade. And it's logged properly. 4.31, yeah. Alright, let me go back to March because I think that's the more interesting time to be. What the hell? Okay. Apparently, what the hell in Hawaiian means gay. I shouldn't say that. We're gonna have to go to MQH 2025, and then we'll go to the Monday right at 9:25. Okay. I don't know what these yellow things are, but I don't know what the yellow bars are. Okay, so this is one of the trading days. There's no trend here. 8:30 at 9:25 is between midnight and, well, no, sorry, 9:25 is between 8:30 and midnight, so there'd be no trade here. I would not want to trade. Let me see if I locked anything. I don't think so. We're gonna go. We should actually look at both markets. I just don't know if this would work for Bitcoin. MPT would be, no, which one would it be? we'd be looking at, I guess, yeah, we would actually be looking at H2 and BTH 2025. Let me add this and BTH 2025. I'm gonna add that right there. And I'll also add MQ8 2025 so I can filter between the two. But yeah, so this would actually, oh no, I just closed it again. Apologize for the delay. Okay, let's go back to Notion. We're on the 3rd of March. 3rd of March, Bitcoin had a win, but you see we're beneath that. I don't know if this is gonna work for Bitcoin. I think it should work the same. So yeah, we wouldn't take this trade. It would be a missed trade. Okay, we're gonna do that like that. Okay, then let's go to back to MQ. We'll go up to the time frame. We'll go to the 4th. Sorry, no, the 5th. So that's when the next trade is, the 5th. Back down the 5-minute chart. Just checking the 4th. There was no trade. Yeah, no trade. Here, 925 loses. Oh my god, what's wrong with the... Whoa. Oh my lord. $9.25. It's in between these two, so let me actually just go back just to make sure. Yeah, so we could still trade. And you would lose. Let's go to the 7th. Okay. The 7th, we're good, it's in between, so we could have traded, and however, it does end up losing. So that would be another one that would have lost. But we can't filter out. Let's go to the 12th. We already passed the 12th, oops. This is an insanely large range. I honestly would not be comfortable taking that. Stop is double. That's why I probably didn't have position on. I used to do it where I put my stop to previous high as double what my normal stop is, 3 points, and I don't trade it, but I stopped doing that just to gather more data. Red at 925 though, where are we? Blue line is actually beneath that dashed line, and then CPI does some weird shit, so we wouldn't trade this actually. It would, the 12th of March, also help us avoid this loss. And 14th, there was a trade, I don't know. No, 8:30 crossing midnight. No trade there either. So we're going now on to the 17th. I'm just gonna do the up until August. I'm not gonna do too much today. Oops. Just want to get, like basic estimate. I just want to go through the losing streaks to see if it smooths out the equity curve. The blue line's in between. So 17th, we could still trade. We could just go back and check. Yeah, we could still trade. Next one is the 20th. But I think the contract expires here, so we're gonna go on to the next M&Q M 2025. So add that, and then QM 2025. And then we're gonna add Bitcoin MBT J 2025. Okay. Whew. The 20th, there was a trade. Right, 925. See that 925 is below, so there would be no trade here. This is what happens when volatility suddenly comes into the market. Stops are too tight, we get stopped out almost right away. And that's like usually when the model fails the most, when volatility spikes on a higher time frame. Yeah, so we're way far below what all the day has done is create a huge range. We're very far below that, and so this would be a no trade, no brainer. We could add the ATR 8 at 25th. Now daily chart. Cool. 25th, and we have 27th and other. So this is on still NASDAQ. Just like no Bitcoin trades in April, huh? Yeah, this one right here would not have prevented us loss. Just go back to make sure. Yeah, it was still in between. So that would have been a loss. Let's go back up. We'll go both days. I think there's a trade on both days. Both on NASDAQ, right? Yeah, see if any of these can prevent us from losing. Okay, hold on, let's look at this one first. Very, very close, actually. Very close, but not quite. Could still take it. This one is weird, actually. But it's that would have been no trade. No, that would have been trade. Sorry. So both these would have been trading days. The next there is a trade. That's the Friday. Ugh. I don't know about that one. Yeah, I don't think I would trade it here. Just because it is in between, but it kind of climbs up there right at 925. Like it's far beneath that, I don't know. It won't move it. So actually, I haven't really avoided any losing streaks using this, but if anything, it's made the model. It's not as good as using a 5 hour, 1 hour, basically, so far at least. But this is just 1 month. Alright, we're in April. I think there's another losing streak. No, it starts in June. And July was also kind of a bad month too. Let's go to the 21st, I think now. 31st. Let's go to the 14th. This one wasn't, no, the 28th was ATR 8. So the 14th, I already know that one's good. I checked it. We'll go straight to the 29th, because what I know, 29th I also checked it. We'll go to the 7th. May 7th. This is 8. I see I have one viewer in the stream. Welcome to the stream. I'm kind of doing a test here to see if I can make the model better using this ATR. Oh no, 925. The 7th would have still lost. Next one is Friday. Let's see if this A version of the ATR matches what that Friday was saying with the other version. Basically, I want to see it still lose. Yeah, so it's beneath actually. No, it would have still lost. So for the most part, I feel like the ATR 8 probably removes less trades the more of a time frame I use, the bigger the time frame. But may also mean that there's more wins, and yeah, that could be the case. Let's go to I'll look at May 22nd. what the hell? 21st. It's in between, so we could still trade. Okay, now this is the big part here. The other losing streak I wanted to look at, and then I want to look at October, November, and then will be enough to conclude. It was 2nd of July. I want to work. Oh, June, and then Q, Y. No, not Y. And then Q, what was it? U, sorry. Yeah, far beneath. So first one, no trade. 9th. Wait, no, 3rd. Sorry. Wait a minute. Was I looking at the 2nd? Oh shit. No. Hold on. The 9th. No trade. The 8th. There was a trade. Goes beneath, so no. Yeah, it'll save us a loss. No, this is sorry, for the 8th. Am I crazy here? Where's the 8th? What do you mean? July 8th. Oh, this is June. Oh, whoops. Okay, there was a trade here though, I don't get it. Maybe I thought it was a trend. Sometimes I miss one. Oh, that's why I didn't log it, because it ended flat. Okay, well, let me go back to June, because Friday, June 2025. Thursday the 5th. Yeah, there was 9:25. That is ATR. So ATR 8, we can put that there. The 4th. I would say no trade there either. Also no trade. This is for the 3rd. And then we'll see the 2nd. Also no trade. So, I mean, this is 4 losses in a row I just avoided. Let's look at the 10th and 11th. Even if some of the losses that we weren't able to avoid, that I was able to avoid the last fine adjustments to the ATR, this is still very positive. Like, I'm just looking for less losing streaks. I don't care if there's less wins and maybe a bit more losses that we take. Maybe not less wins, but maybe I don't care if there's more losses as long as they're more spread out. I don't want to have to go through a long period of drawdown. If I don't have to, you know, like if I have to, then I will. But if I don't have to, there's a way around it. I would like to know how. Obviously, anybody would. The 11th and the 10th. So the 11th. Oh, yeah, there you go. Beneath. So no. This is also ATR 8 and the 10th. Crap. So obviously beneath, I already seen it. Yeah, beneath. So no, also not taking those on the 10th. So nice. Let's go to the 20th. Contract switch MQ U 2025. Also, none of these were on Bitcoin, right? Yeah. Wow, there you go. Another loss avoided. Very nice. Let's go to the 24th. We'll just go there just in case. Go through June 24. Below, oh no, it's not. Okay, oops. 24th at 9:25. No trade. It says it right here, no trade. Let me just verify to make sure. Yeah, no trade. another one. And now we'll just finish July, and then I want to do October and November. So now go to select date, July, go there. So we got a July 2nd and 3rd, July 3rd, we're at 9:30. It says, it's always gonna say no trade. Yeah, it's in between. So we still take that as a win. It's good. And then the third, no, this is the third, sorry, it's a loss. But then the second, let's go at 9:30. See, now I don't want to see this remove much wins. Oh, but it is in between. I'm scared it might do that because we're using such a big time span. What could work, what I might try and do this week when I have more time, is instead of using the current 1 hour range, I'm going to use the morning session. Let me actually see if I can do that right now. Okay, I'll just paste this code in ChatGPT. Actually, I'll do this another time. I'm gonna keep backtesting using this because this is just kind of like a test run. No, let's just do it now. Let's just do it now. Because I mean, okay, no, we're gonna finish July, like I said. Then we'll do it. We'll see if it changes. Next date is the 9th and the 10th. July 9th and 10th. This is the 10th. And it's another win I would have avoided. Okay, so yeah, let's just not do this anymore. I want to use this code and see if maybe I can adjust. Instead of using the current 9 o'clock range, I'm going to use the morning session. Let's go to chat. Yeah, I have the script still, so it's fine. I'm just gonna see. I'm gonna finish backtesting. I'm just gonna see if it changes anything for the wins. For this month, if it does, I'll keep backtesting it. If not, I'm just gonna keep using what I've been using. Oh my god, it always makes an error. It's the same error over and over. It's like won't let it be indented. Oh my god, no. There you go. Oh. Yeah, this would still not really change anything. Right, because we got, this is the 10th. I mean, it's removed a lot of losses though. I just see this is where it might make the model too perfect. Where like, there's very few trades, but it's a higher win rate. I wouldn't want that. Yeah, okay. Let me ask chat a question. I'm gonna ask why it suggested 5. Here's why most traders prefer using 5 ATR, 1 ATR in specific cases, and 1 ATR and 14, 28 make more sense. Extremely common for intraday volatility measurement because it adapts volatility fast. 5 periods short enough to respond to new volatility in the last few candles. Still smooth enough not to drop around randomly. Averages a week of 1 day. If 5 hours action. Perfect balance day traders measuring morning volatility like your 2 a.m. to 9 to 5 logic. Why not use? Oh. Dilutes volatility by smoothing too much. That's kind of what I found. Mixes low volume overnight periods, high volume morning volatility. It does not reflect the unique volatility profile of 2 a.m. to 9:25 for trading. The open 8 is too slow. Live volatility. Clean volatility soft. Signal. Let me give it my model rules. My model shorts above midnight and 8:30 open at 9:25 and as volatility is predictable, I should say. In the past you mentioned I should not trade if APR 1 is 65% of APR 5 or higher. Give me the best APRs for my case. But it's good that I'm backtesting these things, because now I know what works and what doesn't. Yeah, okay. This is what it had initially recommended, so I mean, I'm not going to change from this. I'm just going to keep using this. Yes, but do it so that I can use the indicator on the 5-minute chart and on replay mode without worrying about candle closes. Wait, live intra-hour data. Okay, whatever. Okay. Let's try that. So this is how you make your life easier using AI. I have a coworker that says that AI is bad and makes you stupider. What? Where's my indicator? Fuck. Huh? Okay, well, this maybe I'm making the AI stupid. Maybe because it's in replay mode. Whoa, why is this at, seems like it's 10:25. Maybe it's an hour ahead. Okay, let's try that. Oh my god, this thing again. What? So ask me a quick question. Q and Bitcoin. What? Okay, let me try the first code. It's gonna give me the fucking. Oh my god. There you go. And that still doesn't work. It still is not applying the right thing. Oh. Oh my god. Okay, no. It is now plotting it. But the no trade. Oh my god. Okay, restart. Give a code. That shows the APR 5 and APR 1 adjusted preview on any time frame. Okay, I'll add on to this like that. Nice. Let it in dark red, any tier 1 in blue. Okay. No, well, whatever, I'll change that later. Next, I need to make sure it's the same 68 and 96 on any time frame. 68, 96. Well, it's not really the same, actually. Oh, it is. It's just not the daily chart. It's not the same. Okay, that's fine though. That's good. Okay. And then in replay mode, I don't know if it will work the same. So it's not 16,174. Oh, okay, nice. $61, $62.74, and it's the same, right? Okay, we gotta change that. Okay. Next, allow me to use it on replay mode so that it doesn't use candle closes. So 5-minute chart. Let's go at 8:25. We're at 61.39. On the 1 hour, we're at 61.74. Good. Okay. Nice. Yeah. 62.39. Wait a minute. Let me measure it manually. 74. Okay. But then on the 5-minute, it should be whatever the 8 o'clock range is. Yes. Okay, good. Oh, got it. Okay. Thanks. If the blue line is 65% more or less of the red line, turn the background red. Otherwise, let it be. Nice. Oh fuck. Right between 09, 20, and 09, 29. If the blue line is more stuff than the last line, turn the background red. Otherwise, turn deep and turn it back. Oh, not the entire. That should be good. Now it'll just make my life easier. I can just open my chart and it'll just tell me right away, take the trade or not. What the fuck is that? Why a 10? Bro. Let's go to an example. Let's go to Thursday. Let's go to Friday's trade, last Friday. Oh, it's using 1025. Like, what the fuck are you doing? Keep using an hour ahead. Yeah, it's at Chicago time. That was annoying. Nice. Not June. November 7th. Let's go. Okay. November 7th. 25. That's Friday. I could actually code this into a strategy and like fully automate it. That'd be pretty cool, actually. Let's say I would be fine, but then let's go to a day where the 7th was one of those days where we had a trade and okay, good. It says red. Nice. Very nice. This would have basically said don't take the trade. Okay, well, I think I'm done with everything, so I'm gonna record a video. I'm gonna record the video. Well, the end of the stream, I guess. I'll record it, and then I'll publish on YouTube on video at the beginning, end of the stream. But I mean, stay in the stream, I guess. All right, loved one. So I was backtesting a lot, and whatever I was trying to do with the 8-hour ATR and 1-hour ATR was not working. So I asked chat though a question where I don't know where I asked. Whoops. I should have maybe okay. Alright, level 1. So after all the backtesting I did, I was trying to use a code that would basically show me what the ATR was on the hourly chart from 2 a.m. to now, to 9:25, and then I did 1 hour, then I tried to do from 6 a.m. So it's a morning session, AM session. And I realized it wasn't really working. What it did is it got rid of a lot of trades, prevented losing streaks, which I liked, but it also got rid of a lot of wins. And it just made the model like too perfect, where I can't really compound it. So basically I asked why use the 5, because this is what chat had initially suggested. Use a 5-period ATR and a 1-period ATR on our hourly chart to filter what trades you should take and what trades you should. I said why, and most traders prefer using the 1 and 5, but in some cases it makes more sense. So 5 adapts to volatility fast, smooth enough not to jump around randomly, perfect balance for day traders. It told me why I should use that. The 1 is just the range of the last candle. Fast possible volatility measure represents exact real-time expansion of the market. I don't know how it came to this conclusion. I don't really care, but I mean, this is what most traders do. But it said why not to use the ATR, and I understood this. This is what I actually noticed. It smoothed it way too much, and there was just way too many no trades because it mixed low volume overnight with high volume morning volatility, and it just there was way too many like don't trade, and a lot of wins went away, a lot of losses went away, but it was just not ideal for compounding and growth. So ATR 5. This is just what it's saying. I should use the ATR 1 and 5. I told the model basic rules. I said, mention I should not trade if ATR 1 is 65% of ATR 5 or higher. Give me the best ATRs in my case. And it just said 1 and 5, like it initially mentioned. So that's what I'm going to do. I'm going to use the 1 and the 5. And then I basically built the code. This didn't really work. And I just built it piece by piece. I said, okay, start with this and do that and add this. So over here I said start with this ATR 1 and 5 in dark red and blue for the 1 hour chart, adjusted to any view on any time frame. Then I said next allow me to use it on replay mode so it doesn't use candle closes. And I said right between 9:15 and 9:29 if the blue line is 65% more or less the red line, turn the background red, otherwise let it be. So now when I wake up in the morning, I get on my chart at 9:20 and see if the background's red, don't trade. If it's not red, then it depends with the other rules. And that gave me an idea to now start adding to this code. I'm going to read it and really understand it because I can't read code, like I'm able to read it and see, but I just didn't, obviously I just got it generated. But once I understand the code fully, the ins and outs, I want to start to really work on it and have it so that it will show the red line if, let's say, 8:30 crosses midnight, or if the trend, that's going to be a hard one to code in, how to define a trend, mechanically defining a trend. I think maybe that's like the only thing I'll do outside of the code. But if I can figure out how to code in a trend and say, oh, this is a trend, then I can just have a bot take the trades and never have to do anything, because I don't know, I'm sure there's something I could integrate into this that would just have it take the trades. Maybe there's like a line of code I can use. I don't know. There definitely is a way, but so I basically just used this morning to automate what I do to determine if I should enter the market or not. Now it's just very simple, at least one piece of it, which is the indicator piece, because each time what I would do is I would read these two values here and I would like, okay, if the blue line 65% or higher or lower, 65% of the red line higher or lower, then I wouldn't trade. And so I would like calculate it. I would use my calculator, and then now it's just going to show a red line. So that's good. So in this case I would have done 118.7 with the red line value times 0.65, which would have given me some value above where the blue line is, 42.75, and it would have said no trade. But now it's just going to show a red background, which is really neat. I hope it will just make my life easier. And anyways, that was really it for today. Thank you very much for everyone that tuned into the stream. I know a few people came in and peeped, and no one really stayed for long, but I still appreciate anyone that gave the time to look into what I was doing. It's always encouraging to see people coming in and out, and thank you